Talk me through this crisis and the implications on the African continent. I'm joined by Leslie Maasdorp. He's the Vice Chairman at Absa Capital and Barclays Capital. Welcome to CNBC.
Thanks, Alan.
Now, in light of this global economic crisis, how vulnerable are African economies to this particular crisis?
You may remember that there was a debate about a year ago or so about whether the Western world, the advanced countries, have become decoupled from the developing world. But I think we've realized that the world is very much integrated. Markets are global and integrated, whether it's the capital markets, the labor markets, it's all integrated. So Africa is very much exposed to this crisis as growth has completely slowed down in the biggest economies in the world, in the US, in the Eurozone. Africa has felt the impact in a very direct way. The growth in Africa over the last 5 years, to give you an example, has been in excess of 5%. It's now dropped to, the projections are going to be slightly below 2%, so 1.5, 1.8% is what the forecasts are now. So there's been a massive implication on Africa, specifically in our economic growth numbers. That in turn will translate into reduced revenues for governments, because with less growth, there's less tax revenue, less money to spend on social services, on housing, creating jobs, etc. So the impact is very, very real.
Let's take a look at the crisis, and specifically in terms of our trading partners. Yep. Most of our trading partners being the industrialized nations. Now, in light of the credit crunch, they're obviously shrinking their spend into the African continent. Does Africa have to rethink its future trading partners going forward?
I mean, I think that there's definitely a shift, if you like, in the sort of center of gravity in the world. Everybody's recognizing now that for the next couple of decades, and all the numbers reflected, the massive growth in China, firstly Asia as a whole actually, both India, Russia, because of the sheer demographics and the size of those economies will drive world growth going forward. So there's no question that we in South Africa and African countries in general need to cement the trading relationships with Asia and with China in particular. China's already a significant player on the continent. A Chinese bank, for example, has taken a stake in Standard Bank here. And China's active in the resource sector, in the power sector throughout the continent, from Sudan, Nigeria, right up north. So the increasing focus on Asia is already happening, and we can see the trends around that.
Do you think the economic crisis has produced a new set of opportunities for the continent as opposed to challenges as well?
I think that really has been the key question at this forum and also last year. But it's not that easy, because when you're in a crisis, the immediate thing is to get out of the crisis, and it's difficult to really find the sort of silver lining where the opportunities are. It's clear that governments now are taking much more center stage in economic management, and there's if you like, a recognition that just an unfettered reliance on markets is not going to deliver, whether it's in provision of jobs, whether it's housing. So there needs to be creative. We need to look at new models of partnership between various stakeholders. But I think we also need to look at those areas where we haven't added value to our commodities, because there's always a focus on Africa simply focusing on resource extraction and the export of raw materials, rather than beneficiating, adding value and creating jobs in the process. So instead of sending cocoa to Europe or elsewhere, we should be having the chocolate making factories here, etc. And there are a whole range of other examples. One can make diamonds, developing a jewelry industry and so on.
So it's about adding value to the commodities that are actually being produced and extracted from the African continent.
Absolutely.
And let's take a look at some of the fundamentals driving investment into the continent. What are some of those?
I think, though, investors go for yield, go for a return. So the first major change over the last 10, 15, 20 years in Africa has been political stability. As you know, there's been large parts of Africa were conflict zones throughout the 70s and 80s. Thankfully, that is now past, right? So political stability and a conducive climate for business is one of the first sort of ingredients. Secondly, we need strong institutions. I mean, Africa has been plagued, unfortunately, with leaders that stayed beyond their welcome. That also now is coming to an end. Most countries have democratic regimes, and they have, with few exceptions, leaders have been voted in power, but also been voted out of power. Investors want strong institutions, freedom of the press, an independent judiciary, etc. So it's important to focus on building independent institutions.
Now, post the global economic crisis, we're not too sure when the end point is, but what will the economic landscape of Africa look like, in your opinion?
I wish I knew the answer to that question. I'd be making a lot of money, because there's a huge debate right now about what the nature of that recovery will be. President Jacob Zuma participated in a session yesterday, and there was a huge discussion about, is this going to be a U-shaped recovery in the global economy and what that will mean for Africa. U-shaped meaning sort of a slow sort of upturn eventually. Will it be a V-shaped recovery, meaning that we are now already beginning to see the green shoots at the beginning of the recovery? Or could it be in fact a W-shaped curve where, you know, we're seeing the trend upwards now, but we could be falling again? So there's a massive debate about that right now, but it's impossible in the few minutes we have today to talk about what the post landscape will look like. The one thing that one can say for certain, that there is going to be a new focus on more regulation. And one just hopes that there's not going to be if you like, a move away from more deregulation towards overregulation. We need to find the right balance, if you like, and have better regulation rather than more regulation.